if you don't do what I'm doing. It's way more lucrative if you can find a way, like if you guys are doing multifamily, to continue what you're doing and build. So I guarantee, so I have 600 units. I guarantee if you guys had 100 units that were all 10 unit clusters, 4 units, 5 units, whatever, 20 units, it doesn't matter, all within the same area, you can either bring on a PM and have it in-house, or you can outsource it, doesn't matter, whatever you want to do. I promise you, you will make way more money than I am making cash flow and potentially even on the resale if you
What?
go to sell.
Okay, now you got.
Welcome back to the Weekly Juice. As always, Ryan and Corey here with another episode for you. Today is episode 38. We have on an incredible person, investor, and educator. Honestly, overall, total powerhouse. Her name is Ashley Wilson. She's an avid real estate investor from the suburbs of Philly. She owns several real estate businesses and recently wrote a book called The Only Woman in the Room, detailing how women can find success in real estate while sometimes being the only woman in the room. She began her real estate investing career in short and long-term rentals and then transitioned to flipping houses in the suburbs and also did some while living overseas. So upon her return back to the States, she's moved into the large multifamily sector, and throughout her investing career, she's been involved in over $40 million worth of real estate and has overseen $5 million in construction. So she's done it all. Today, she's focusing on flipping houses and operating a large multifamily property business as the asset and construction manager. So
Yep.
I know it was a mouthful, but she has done so many different things and gave us a new perspective on a lot.
She's you can tell she's really genuine because after we recorded, she gave us like genuine advice for what she thinks we should do. And I think that she's really empowering, especially for women who want to get into the investing game. And I think that really anyone who wants to get into the investing game, but she's really looked up to in this space. And we're excited. We were really excited to have her on, and the episode lived up to the hype. So you want to dive in here?
Let's get it. Welcome to the Weekly Juice. Ashley, we are so excited to have you. We have heard lots about you and are super inspired by your story, so we wanted to share it with our listeners here. So if you could just give a little brief background on yourself, who you are, where you're from, and essentially how you fell in love with entrepreneurship and real estate.
Well, first of all, thank you so much for having me on. As you mentioned, my name is Ashley Wilson, and I live in the suburbs of Philadelphia, Pennsylvania, in a small area, Radnor, if anyone's local. And I got started in real estate a little over 10 years ago. My husband and I both were doing very well within our own careers. My husband was a professional athlete, and I worked in pharmaceutical and clinical research and development. So because we were high earners very early on in our career, we were looking for ways in which we could diversify our retirement strategy. We looked into a lot of different vehicles, ultimately landed in real estate for a whole host of reasons, but started with house hacking and short-term rentals, which turned into long-term rentals. And then a few years later, I left my pharma corporate career to dive into full-time flipping with my dad. So we partnered together and created a business. And then a few years after that, we transitioned into large multifamily.
It's pretty cool. I'm curious, what about real estate took you? Look, you had a full career, right? You were working and obviously doing something that you at least liked, even if you didn't love it. You did it for a long time. What about real estate made you decide to go full time?
When I was younger and I was a little kid, everyone always asks you, what do you want to be when you grow up? And I never had a specific profession that I always reverted back to. What was important to me was the ability to spend time with my family. Fast forward to working in R&D, and I was being fast tracked up the corporate ladder. I was the director of global vaccine development for
Wow.
global project managers. And ultimately, that came with a lot of sacrifices, specifically my time and freedom, not only on the, Monday through Friday schedule, but my evenings and weekends. And what I realized is I always thought in order to have financial freedom, I would have to work really hard and give up all of, sacrifice along the way. And eventually I would get to a point where it would all come back to me and I would have this financial freedom. But very early on, when I started diversifying and investing in real estate, and real estate provided cash flow while I was sleeping and I didn't have to be on this treadmill to make money, what I realized is that's the smarter way to do it. I didn't have to work these crazy hours, 80, 100-hour weeks, at minimum, to make the same type of money that I was making in real estate working half as hard. So I mean, that was like a very aha moment for me, to make that transition. So ultimately, I'm naturally an entrepreneur by spirit. There are multiple examples when I was a little kid of always just wanting to create things. I have a very innovative type mindset. If you've read Traction, I'm definitely the innovator side of those dualities. But ultimately, real estate provided that vehicle. And obviously, real estate also has additional benefits. I mean, it's a great way to defer your taxes, so sheltering some of your income you're making, and also too, it's a hedge against inflation. It's a real estate backed asset. I mean, there are a lot of benefits to real estate that I'm sure I don't have to, highlight to you guys because you guys are very smart. But that to
Not
me
that smart,
was another.
Thanks.
Well, you're fooling me really well. So
that's what we do.
But I mean, but ultimately, that's the reason why we transitioned.
Awesome. Can you dive into, we actually haven't had anyone typically or specifically dive in on tax sheltering in real estate.
Mm-hmm.
Could you just dive in on that a little bit and I guess it kind of show people the benefit or paint the picture of how you can shelter some of your taxes and reap the rewards of real estate when it comes to taxes?
Yeah. So first, I always give the disclosure that I'm not a certified public accountant, and you should always speak with your CPA or financial advisor or a lawyer to get tax, specific tax information that applies for you. But what I like to say is that if you're playing a board game has a set of rules. And if you're playing against someone who's never played the game and doesn't have access to the rules, and you have access to the rules and you're well versed at the game because you know the rules, statistically, you're more likely to win that game. And the game that I'm paralleling that to is life, and tax codes are the rules. So if you're not well versed on the tax codes, or you don't have access to a certified public accountant who does and can help you and shape the way you invest, you're really at a disadvantage. So if you look at the US government and how it's set up, we have a housing crisis. I don't think anyone doesn't know that we don't, that we have this huge problem. And there's really two strategies in which the US government can offset this housing crisis. One is they can raise taxes to everyone. And if they raise taxes to everyone, they can then take that money and infuse it into housing. Or two, they can provide tax incentives to higher net worth individuals so that they invest to get these tax breaks and offset their income so that there's an advantage. So what the US government does is they decide every, term, whatever, every few years, where our weak points are as a nation. And then they create incentives for higher net worth individuals and corporations to then go and invest their money in those areas. And that's how the US is able to stabilize our overall global economy and all of the issues that we face as a nation, because it's too grave of a situation across the country for us to tackle everything. So they just pick and choose. So specifically how that drills down to an investor and an investor level is that as an investor, when you invest in certain asset classes, you get tax advantages through depreciation by doing like what's called a cost segregation. where you can offset your income of a like kind investment with another investment through doing a cost segregation or a depreciation schedule of that specific asset. So if this is way above your head and what you're not familiar with these terms, what I would advise, and I always advise, is that you speak to a certified public accountant who is well versed in real estate. So that's their specialty. Why do I say that as opposed to a financial advisor? Financial advisors are advised to they're set to advise you on certain investments that they have kind of like a biased approach on, because they get incentivized by having you invest in certain asset classes versus others. A certified public accountant has no motivation to push you towards one investment versus another. All they're trying to do is help you keep as much money as you are making. So they're going to be well versed in what strategies are most advantageous for you. And real estate currently, if you look at it through the current administration in Washington and the future administration in Washington, it's two different perspectives on real estate, but the housing shortage has not gone away. So there will, until we have a more equal level playing field on housing availability versus the demand, there will always be incentives to invest in real estate.
That's you could teach a class on it. It sounds like you're very well versed. So I think it's really cool because people were always kind of freaking out about whether there's a Democrat or a Republican in office and how that's going to affect investors. And kind of the way I look at it is like, I think there's too much of that shortage for it to be sway too far in one way for it to affect it, or for it to give investors incentives to not invest. So I think it's thank you for that information on the tax code, because you taught me something.
And to your, sorry,
yeah.
just to go off of that, and to your point, people can argue whether or not we should have a Republican or a Democrat in office, and specifically, Trump versus Biden. Obviously, Trump is pro real estate. He has made a lot of money through real estate. So he's going to continue having advantages through real estate. But Biden has also made money in real estate. In fact, most high net worth individuals make money through real estate.
90% of millionaires?
Exactly. So at the end of the day, there's always going to be real estate incentives and benefits, no matter who's in office. And if you look at Biden, who is actually putting a lot of energy into low income housing and affordable housing, it really just shifts on where there's going to be more advantages. I mean, there was a lot of early on discussion of opportunity zones going away. Well, if anyone's, positioned well to want opportunity zones, that whole incentive to be extended, it's probably Biden.
Agreed.
So this isn't a political, this isn't one way or the other. It's, you have to play the hand you're dealt. And as long as you're able to adjust and multiple strategies, you can be successful no matter whether it's a Democrat, Republican, or independent in office.
Agreed, 100%. I think I'd like to give our listeners kind of even a broader picture of your investment portfolio too, because you gave a great definitions and information on the tax code. And I'm curious, what does your portfolio look like now? And maybe just paint us a little bit of a picture of how you got to where you are.
So we're still doing flipping. So we have some houses that we're flipping. We actually have a single family that we're renting, and we have a few houses that we're doing for clients. And so we're doing full renovations for clients because we realize the shortage of housing has forced retail buyers to buy investment properties because they have nothing else to buy. So instead of trying to compete with retail buyers who can pay more than us, we shifted our business. And what we do is we do the full renovation for these higher end clients so that we don't have the carrying costs, we don't have the exposure. That's kind of a side note. So we've done that. We also, to invest in precious metals, we have, gold and silver and stuff like that. Because if you follow like the copper gold index, that's an indication of when a market's going to swing. So copper in a very strong market offsets gold. And once they switch and gold starts to go on the rise, that's an indicator that you're nearing a recession. And if you followed the market trends that we've had over the past run since 2008, you can see copper was, at its apex and then started to come down. And then you saw, gold start to transition. So that's a good investment. That's more of a long-term investment. If you're talking like a stocks and bonds kind of strategy, that investing in precious metals is the bond kind of philosophy. It's just a safeguard. And especially for us, if, pessimistically, we're not true believers in the way that the US economic system is structured, because our currency is not backed by a precious metal. And if you look at just the history of currencies changing, world currencies changing, we're coming due on a world currency change. So having that investment in precious metal offsets that risk. And then we have apartments. So apartments, the reason we're invested on the apartments is the apartments, to what I was just talking about in the tax advantage side, the flipping doesn't really provide that advantage. It more so provides cash infusion. On the apartment side, it provides a lot of tax advantages and, defers our taxes, which is obviously advantageous. I mean, as my husband likes to always say, the name of the game is defer, 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 die. So you defer your taxes as long as you can, and then you die and you never have to pay them. So really that's kind of our strategy, as grim as that sounds. But apartments also too provide a hedge against inflation. So because of the rising rental rates, it offsets the natural inflation that occurs within any given market.
Excellent. So I think you kind of gave us a good inclination or a picture of where you're invested now. And I want to just bring it back a little bit. I know you keep mentioning your husband, and I want to go to the beginning of real estate in your story. I believe you started investing in Hershey, Pennsylvania by the Hershey factory, but you were overseas. And I think that's super intriguing. And just, can you walk us through how that happened and how you even got the bug?
Yeah. So actually it's a little bit different than that. When we started investing in Hershey, Pennsylvania, because my husband was actually playing there. So we started investing there because we needed a place to live 9 months of the year during his season. And, his teammates needed a place to live. So we house hacked. So his teammates rented other rooms from us while we were living there. And then we continued to own that property once he signed with another team. He signed with Columbus Blue Jackets. So we moved to Columbus and we still had this property. So the one famous guy that lived in our place, there's a few, but one famous guy was Hobert. So he was the goalie for Washington Capitals, and Hobie, as we called him. But, so these guys lived in our place while we were living somewhere else, and we would manage it. And then in the summers, we would travel between Philly and Toronto, where my husband's family, it's actually London, Ontario, where my husband's family is from. And we would have these short-term rentals, and we set it up on autopilot, so we didn't have to constantly be managing this day to day. So we did that during the summers. And then once the season started, we would move the hockey guys back in. And it was very easy because it was just like referral. Like, all the guys wanted to live in this house because it was a huge party house. It was a big house, and, had a lot of room to have the entire team there. So anyway, fast forward, when I started another real estate business while living overseas, was actually the flipping business with my dad. So we were living in Europe and Russia, and I had resigned from working in pharma. And the whole idea was that initially we were going to dive full-time into real estate after my husband retired. That was the game plan. And I left pharma, and I'm sure, just hearing me speak, you can tell, like, I can't sit still. So I said to my husband, why are we waiting until you're retired? Why not have me start now so that we can build up enough income, so once you're able to retire, we don't have a gap in income. We have this replacement, and that'll allow us to, be more risky and, etc. So my husband thought that was a great idea. So I approached my dad about partnering with a flipping business. And that's how we started the flipping business. Is my dad and I started that when I was living in Europe and Russia.
And your
So
dad owns a construction company, and that's how you kind of join forces?
Yeah, so my dad, he's a general contractor. He's had his own business for over 40 years or so. That's all he's ever done. And he is extremely well versed in older homes, full renovations. He's worked on everything from like Section 8 all the way to multi-million dollar mansions, commercial properties. I mean, if you know Dorney Park, he painted it at one time. He painted all the roller coasters. So
wow,
like he's done a tremendous amount in his career. So it's a no-brainer to partner with someone like that because I mean, I will never be able to replace that knowledge.
absolutely. I'm wondering if you could maybe dive into the flipping business because believe it or not, we don't talk a lot about it on our podcast. And Rye and I think Rye's family is actually in the construction business, so he probably knows a little bit more than I do. But I'm curious on if you have certain criteria that you look for when you look to flip, and maybe if you could just talk a little bit about that for our audience that might be interested in getting into that to raise capital for other investments.
So flipping is a very interesting animal. I think most people think that flipping is the first parlay that someone has into investing, but when you dive into it further, most of the time it's house hacking that someone really gets in or wholesaling. But flipping is probably the sexiest investment, the most talked about investment style. If you say you're a real estate investor, people always just defer back to flipping. And the reason why people do that is because there are a tremendous amount of people who are flipping. And with flipping, the reason why it's easy to jump into flipping is because people understand it, because most people want to seek a residential house themselves. So it's something that they can understand, whereas most people are not going to go out and buy like a 10-plex, because that's not like for them personally, that's not what they're looking for either. So when they go to flipping, they're looking for a house that, they can relate to. And HGTV has done a really good job at, turning people on to this and making it think that you can condense a 3-month flip in a 30-minute episode.
It's very
So
sensationalized on HGTV. It's yeah.
exactly. But if you look at the statistics, and this was a few years back, so it may have changed, but it's something like over 95% of flippers actually lose money on their first flip. And the 5% that don't make 5,000 or less on their, it's like 90% of them make 5,000 or less. So the margins are really thin when you're first getting started. And I'm sure, Brian, you can attest to this with construction. There's a whole nother component that you have to understand besides just running the numbers on paper. When you open up the walls and you dive into things, cost changes and timelines change, and time is money in flipping because of holding cost. So there's that complexity. But ultimately, a lot of people get into flipping because you can get into it at a low price point. So you can get into it, and most people think you have to have money to get into flipping, but you really don't. You can partner with someone who has money. You can have the seller hold back the note. There are a ton of different creative strategies. You can use hard money. That's another very popular way in which you can do it. And that can even account for your construction line too. So, I would always advise that if you're going to start off in flipping and you know nothing about construction, you should always partner with someone who does, because they can provide a lot of advantages, not only from knowing how to do the work, but their resources and the process. Because there's always a way in which you should do a schedule. And if you do things out of order, that could eat up a lot of your costs and time as well.
So I almost see it as, more most people I hear, essentially they'll flip a house in order to create a lump sum and fuel their future rentals. What do you see as the difference between flipping and buy and hold long-term investing, pros and cons of each, and maybe what you would recommend for someone that's kind of just out the gates, maybe in their first couple deals?
I don't want to ever knock a strategy, because everyone comes to the table with a different background and different needs and different wants and a different point in their life. So there's always benefits to every strategy. And I think that's what makes it difficult to pick a strategy in real estate, is because you can always find someone who's making money in that asset class. So it's hard to really stay focused on one asset class. But, to your point on the benefits of flipping, hands down, the number one benefit is the cash infusion that you're getting. So you're getting these large lump sums, and that can be an extremely lucrative situation, especially right now. Like if you look at the housing right now and time on market and prices, I mean, it's insane. Most people thought that COVID would have the opposite impact that it's having. And because inventory is even lower than it has, I mean, it's all-time low, and you still kind of have that demand, prices are skyrocketing, which makes flips even more lucrative. So it's going to bring more people to the table. So there is that component of it, but ultimately flipping is just another job. So if you're looking at real estate to be a vehicle to get out of having a job, this is just another job. Like you're literally creating another job for yourself. But flipping is a very easy to scale process because there are so many single family houses out there. I mean, even you could flip duplexes. I mean, you could flip small multis too. So there's just so much inventory you can go after, and that provides its benefits as well. On the buy and hold strategy, buy and holds, typically when you're going after larger sizes, those are harder to come by and obtain because a lot of people like to hold them. They don't want to sell them. So you're normally looking for mom and pops on the smaller multifamily. You're looking for mom and pops that are just, they're fed up with it. They're done. They don't like the vacancy. They don't like the issues, the problems. And on small multifamily, the margins don't really make sense unless you have a large volume within a specific area. So for example, if you're going after like a 10 unit, the management cost, if you outsource it, is typically around 10% if you bring in a property manager. If you're doing it yourself, then, that's a different conversation. But ultimately, the only way that strategy really works, and what is the downside of it, is you need to continue buying these 10 units to really be able to outsource it to someone else, because once again, then it's a job. So if you truly want to be passive and hands off, you just need to buy more in that area, or just buy large properties to begin with. But if you're looking to get rich off of buy and hold, it's not a overnight wealth generator like flipping is. It's a long-term strategy. It involves natural and forced inflation and cash flow along the way. The only way you'll see major gains is when you sell. So it's a completely different strategy, but it does offset your taxes, which flipping does not. So there are pros and cons to both.
I love how you mentioned natural and forced inflation. Can you dive into forced inflation and forced appreciation over time too? Just kind of how, I know with specifically your rehabbing business and flipping business, you probably have a lot of expertise there.
Yeah, and you corrected me. It's really forced appreciation. I said inflation, but I was thinking back to taxes. You're right. It's forced appreciation. And the way forced appreciation works is, let's say, for example, you have a rental unit and you're renting it at $700 a month. And then you come in and let's say you pull up the carpets, you put down vinyl plank flooring, you put in new countertops, you resurface the bathtub and the walls and whatever, and you make the property look nicer. You can maybe then charge $800 a month. So that is forced appreciation, is when you take some sort of effort on a distressed component of the property to raise the rent that you're getting. You can also do forced appreciation just through management. It doesn't necessarily have to be a physical change to the property. It could just be a management play. So any way in which you take a distressed situation, so it's either distressed management or distressed property, and you improve upon it, that typically comes with an increase in what you can charge.
Excellent. So one last one for me, because I'm sure Corey has a couple too. I'm thinking back to when we touched on your portfolio, and I know you have your hands in a lot of different things. What is your wheelhouse right now that you're currently seeing the best margins in? And are you going to stick with that, or are you going to potentially dip your toes in other areas?
The best margins are flipping right now, because we go after high-end flipping and there's a huge yield, but that's only if you look at it as a snapshot in terms of cash infusion in a short period of time. If you're looking at the best margins over a longer hold, then the best margins are in multifamily. So it really depends on that X factor, and the X factor is time. So if you're telling me what makes the most amount of money from, today to 3 months from now, it's going to be flipping. But what makes the most money from me from today to 3 years from now, it's definitely multifamily.
It's very well put. I think the way that I've framed it in kind of the research that Ryan and I have done in our short investing career is like, if we wanted to flip homes, we could make the capital, like you said, in a short time frame. But like you said, it is another job, as opposed to consistently buying small. Right now we're in the small multifamily game, but we will get into larger, consistently buying multifamily, call it. And that is getting Ryan and I, or whoever is doing it, out of the treadmill, so to speak, right? That can quickly get you out of the treadmill, or not quickly, over maybe a longer period of time, depending on how quickly you're buying them, that will get you off the treadmill, versus the flipping that gives you the cash infusion. I want to stay with the flipping right now, because I'm wondering if you could walk us through maybe just like a specific deal, like maybe even if you use rough numbers, how the duration of your flip, maybe the cost of the buy, the rehab, and then when you end up selling it. I'm curious, kind of how those numbers look for you.
So a few years ago, we bought a house for $315,000. It was in Bala Cynwyd, and we put 150 into it for the rehab. I don't remember what our purchase cost, holding costs, and selling costs were, but our sale price was 742.
Doesn't
Which
matter. You don't have to remember what they are. That's the case, right? Like,
so our profit was like, I think it was like 116,000 or something like that, around there. So that house was renovated in, I'm going to guess, probably 2 to 3 months, because that's our typical timeline.
wow. And that's a full $150,000.
Full
That's a
gut.
full gut, right?
We always do. I mean, how many houses have we done that? I think we've done 2 houses that haven't been full guts. Everything else is a full gut. Everything, even on the houses that, I'm trying to think for a second here, on the ones that we did that weren't full guts. No, the ones we did that weren't full guts weren't 6-figure, but every other house that we've done have been 6-figure renovations.
Got it.
So when you're going through, I'm just thinking a little bit further back, and like when you decided you were getting into the flipping game, and you jumped in with your dad, and maybe right outside of working in pharmaceuticals, you didn't know how much it costs to do a certain project. So if you could advise someone, we get questioned all the time. That's why I want to bring it up to you, an expert in the field here. It's like, what is the best way, or where can I find the best resources to estimate my rehab costs and ensure that they're, within margin, and I'm not paying too much?
Okay, so I'm just going to come off the top of my head with 5, because I'm sure I can think of more, but just out of interest of time here, I'll rattle off 5 ways. One is you pay a contractor for the day to follow them around, and when they're doing estimating, and have them explain to you, and you pay them for their time. So they're basically educating you on the process. 2 is you pay an inspector to go around with them and read their reports, because in their reports, when they do an inspection for a house, they do a cost estimation for repair. And they're going to also show you too what to look out for, besides just, so you're going to see it from 2 different perspectives. You're going to see it from a very analytical perspective, someone who's like looking for every nitty gritty thing, whereas a contractor is only looking for a specific job that they're doing and quoting that out. And you'll be able to determine how they're pricing labor and material, like what the going hourly rate is per trade, and what the cost of material is in that local market. 3 is definitely Dr. Google. Google has, you can plug in like a zip code, and you can plug in specifically what you're looking for, like what's the cost per square on a roof, and then, get a quote on like how many squares you have on your roof, and be able to quote different materials and the labor rate, and have that broken down. So that's 3. 4 is to read Jay Scott's book on estimating rehab costs, because that book, even though I grew up with my dad, and my dad, is a general contractor, that book is a book that has laid the foundation for not only my ability to estimate the cost of a rehab on a single family, but also on a large multifamily. So that's another good resource. And fifth would probably just be trying a smaller project and estimating it maybe around your house, or something else, or like talking with someone else, and then deploying resources on that house and then breaking it down. I also think too, once you work the job and do it yourself, whether you work for a contractor on the weekends or on evenings or something, part-time, you can learn just real quickly, first of all, how difficult certain things are, but also too, when things are easier, like how many man hours it takes to do a certain job, and like whether or not a certain rate is fair to be charging. So, I mean, there's so many different ways that you can come up with these estimating. I think people are always fearful of what they don't know, but as long as you can control your ability to access information, you should never be fearful of anything.
That's amazing. Thank you for all five, because we haven't
Yeah,
heard.
that was some of the best explanations that we've heard. So I love it. Rye, do you have something
I
specific?
do. Yep.
Yeah.
I'm glad you brought up Jay Scott, because to my knowledge, he's a partner of yours in Bar Down Investments, or Bar Down Investments LLC. Can you walk us through? I know you have another House It Look LLC too. So you have your hands in a bunch of different businesses here too. Can you explain both, and then maybe explain kind of how you and Jay Scott partnered up?
House It Look LLC is the business I have with my dad, and that's our flipping business. So we tailor our flipping business to primarily early 1900 homes. I would say 1900 to 1960 is our sweet spot, but we've done everything up to 2005 construction. And that is solely just me and my dad. So my brother worked in that business for a brief period of time, but my dad and I have done it since day one together. That's How's It Look. Bar Down Investments, that is a business that my husband and I started, and Jay, and then we have another partner, recently came on as well in the past couple of years. So we are now all partnered together, the four of us, on the acquisitions of large multifamily. And Jay and I met about 3 years ago at Dave Van Horn's Mid-Atlantic Summit in Philadelphia. And I approached him about actually another business idea, and he really liked the idea. So his partner happened to be at that event. My husband was at that event. Next thing I know, we're 3-hour conversation, the four of us, and just kind of spitballing and talking between the four of us. And we had never met each other before that day. So then we started emailing and working together, and we all kind of naturally came to the conclusion we didn't want to pursue this opportunity, but we really enjoyed working together and kind of exploring an opportunity together. Fast forward, Matt Faircloth brought me on to consult with several of his apartments. And I went down to Kentucky to look at these apartments for him. And Jay was there, and I hadn't talked to Jay in a while. So Jay and I reconnected and started having conversations again. And it was just, like a natural fit. Jay and I think very similarly, but we are still different. So, he's just a brilliant person, period. And he's a really great person to work with. And so is our other partner. So the four of us just get along exceptionally well, and we thoroughly enjoy working together. So I'm very blessed. He always says, like, he's so lucky to have us, and because he wasn't in multifamily before, in large multifamily, but we're the ones who are truly honored to be in his presence. And I think that speaks to good partnerships, when both partners feel like, both sides of the partnership feel that they're honored to be each other's partner. I mean, what more could you ask for?
I feel like that with Rye, just so you know. So, but I think that's brilliant, and it's like-minded people who have knowledge about a specific topic, organically sharing information, and then that's where the partnership. This is not rocket science, right? I mean, that's how the partnerships form. So I think it's wonderful. I really do. I'm curious about, you're at this level that people may perceive it as like an intimidating thing. Like you've done a lot. So for some of our listeners that are curious, because I know even selfishly I am, Ryan and I have a few deals. We're realizing that this is working. What we're doing is 100% working. How long is it going to take us? We're not sure. We had conversations with investors who just skyrocketed, and we're thinking we have to think bigger. I'm curious if there's a specific real estate deal or a time frame that took you to the next level, because I can buy a deal a year for the next 20 years and I can be financially free, and probably even before 20 years, right? But if somebody wants to advance that, what's the deal or the time frame that took you to the next level in your business, if there is one?
I think from an outsider's point of view, everyone always is like, Ashley, how did you make the transition from single family to multifamily? And why, like, how did you skip over small multifamilies? Like, how did you, because I wasn't doing like, that's why I don't speak or coach on duplex, triplex, quads. I don't talk about that. If you notice, like, I don't talk about that at all because I didn't do that. I'm not going to talk on something I didn't do. Right. And well, at least I believe you shouldn't do that, but I know people
Okay.
do, but I don't. So I think the thing is that every single deal I have done has been hugely impactful in my life. And every deal has taught me a lesson that I've used for the next opportunity. And I've never been, maybe I'm just stupid about this, but I've never been turned off by the size of a deal. Like, I've never been intimidated. I've never been, like, if someone said to me tomorrow, I mean, I've looked at deals like this, and people send me deals and they're like, okay, the asking price is 100 million. And like, a lot of people be like, holy shit, like I can't do that. Like
$100 million.
I've $100 million. Like, I don't even know enough people who have, like, collectively, like, but for some reason, like, it just doesn't intimidate me. I don't know what it is. There's always a way. Like, my mom always instilled in me on even little things, on like how to do your schedule, how to squeeze things in, she always instilled on me that there's always a way. You just have to work really hard. You have to be smart. You have to be flexible. You have to listen to people. You have to take what people say and try to use it to your advantage. You have to leverage situations and leverage people and time and resources, and then you can execute. And to me, every situation I come across is really just a matter of doing those things. I think when people look at my history, they naturally assume the the greatest advantage for me was leveraging my construction to get into multifamily on the partnership I did. That was a huge benefit. But if my dad didn't partner with me on single family, I wouldn't have known construction as intimately as I did. If we hadn't done as many properties as we had, I wouldn't have learned how to automate and systematize a process. If we hadn't done short-term rentals, I wouldn't have learned how to manage from afar real estate and wanting to have a summer where I'm not getting phone calls from tenants. And then when I moved into multifamily, if the property management company that I worked with and the regional that I worked with didn't spend the time to teach me every single thing about property management, because I skipped that stage, if she hadn't spent that time, then I wouldn't be able to understand what they're dealing with on a day-to-day situation, to be able to manage their workload so we can successfully operate these properties. I mean, there's so many little components. I can't think of one thing that was just so monumental that was shocking or anything. I mean, when you look back, everything has made sense. So that's why when I look at $100 million deal, I say to myself, I have this skill set that, someone who can acquire this property needs. So, and I have the resources, I have the team, I have the infrastructure. I just need to execute. And that is, I think, the difference.
I think the limiting belief, or the lack of the limiting belief, is major. I literally had my eyes opened in an interview we did the other day where we interviewed a 25-year-old who's got 900 units. And I think, this guy's brilliant, but if he can do it, I can figure out a way, right? Like there is a way. So
Yeah.
it's very, very cool. Very cool advice. I'm wondering from the beginning, this is a selfish question. Are you the type of person that would say, if you are buying small multifamily, don't self-manage at the start because you could be better off spending your time going and acquiring more? And that's just popped into my head a
You're
question.
trying to get out of it in any way you can, dude.
Me?
He does not want to manage.
Yeah, I hate managing, but I also think I could be spending my time acquiring deals as opposed to talking to tenants. So it's both, right?
Okay. So there's a personal belief and then there's my logical belief. My logical belief is there is no right or wrong answer to that question because you gain a lot of knowledge that will help you down the road to execute. But I always think there's a right person for each responsibility. And to me, you're wasting time if you're not that right person in the first place, because it takes you longer to execute on that. So you first of all, you don't want to do it. It's going to take you longer to do it. And if you want to say one major shortfall I had, it was this whole concept of, I knew I needed a VA a year before I hired one, which is a huge problem. So I've lost a year. This past year, I lost that entire year because I didn't take that year to hire a VA and outsource work.
Can you just describe a VA real quick for people that may not
that's
know?
a virtual assistant. So basically,
oh, got it. Okay. When I say people that might not know, I mean like me. So thanks. I know. Now I know. Virtual assistant. Got it.
So for a year, I mean, I literally lost this past year because I didn't hire a VA until September, and I needed a VA. So things just didn't get done because first of all, it's such a bottleneck because I was doing it and wouldn't let go. And my whole thing was, I don't know why, because they're not that expensive, but my whole thing was like, oh my God, how am I going to, I looked at the whole pie instead of just a bite of it. So I looked at the whole situation and was like, how can I afford to hire someone for a full year and carry their salary? And what I didn't look at was, okay, so, I'm paying $200 a month for 20 hours. Okay. So to me, it's like, okay, could I lose and it's a 3-month commitment. So I was like, could I lose $600 and be okay? Yeah, I can. I can lose $600 and be okay. So why am I sweating $600? So that was the real trigger for me to hire them. So I hired them to take the gamble. And now I'm like, okay, I want to outsource everything. I want to pay everyone to do everything. Why am I doing this? This is frankly a waste of my time, because what I realized once I hired is my focus was on mouths to feed instead of hands to sew. And that was my major hang up. And that was a huge shortfall in my mindset. So I just said one thing I'm really great at, which is I'm not intimidated by things, but my shortfall has always been, and I think a lot of entrepreneurs are this way, and it's not making an excuse. It's because I was a psychology undergrad. It's trying to understand why behind what I was doing. The why behind it is, as an entrepreneur, you are that kid in 5th grade who, when there's a group project, you take on the whole responsibility and you tell all the other kids in the class, just show up on presentation day and don't say a word and ruin it. So, and that's all entrepreneurs. That's who we are by nature. So, to tear down 30 plus years of that mindset and not letting other people really help you along the way has definitely been very difficult for me. But this past year, no more.
We're both jumping at this. I think it's brilliant. And I'm going to jump in real quick before Rye does, because you're not losing it's funny. People have the mindset of the loss of the $600, but it's the opportunity cost of the money that you can gain triple, quadruple, exponential by just making that one hire. And I think you've just taught me something. So I love it. Rye, go ahead.
It's just in our blood, right? We talk about like being in the weeds. Like, I think just control freaks in general. I mean, I'll speak for myself. I need my hands on everything, or I feel like I need my hands on everything. I just want to perfect it. Even if sometimes it's better just to get it out rather than to scrutinize it and it goes out late at night. So I'm totally on board. I'm thinking about a VA and just no one's specifically brought this up yet on our show. So I would love you to dive in a little bit deeper. I think if someone hears it right away, they're like, oh, a virtual assistant, like not a real person, just helping me out with certain tasks. Like, what is a VA? How much does one typically cost? How long is the contract? And then
How do they help you, right?
what are they taking off your plate?
VAs are not AI. They are real
Yeah.
people and they're incredible. And you can get VAs pretty much from anywhere around the world. I know VA companies that source their VAs from Mexico, from Singapore, which is where, you know, my VA is from, Thailand. I literally like all over India. I mean, you can get VAs anywhere. And the what you pay ranges based off of the skill set you need and the company in which you're hiring from, and then your package of how many hours that you want. And every company has different requirements. So you could be on a month-to-month basis. It could be just a project specific if you want to data mine, or it can be on a continual basis. Like, for example, my VA it's month-to-month, and it was an upfront 3-month commitment. And then from there, it's rolling month to month after that. But you can literally outsource anything and everything. So I use that as an opportunity to say, like, when I'm doing something all the time, I'm saying to myself, like, why am I doing this? And if I'm saying, why am I doing this? Then I'm forwarding it to my VA. And then in addition to that, if it's a repeated task, all I do is sign into my Zoom. I record myself talking. I share my screen, show her what I'm doing, record it. I have a shared file on Google Drive with her. I upload it into there so she sees exactly how to do it. I send her an email, hey, check Google Drive, just uploaded a new video on how to do this next process for me. Here you go. And then I just forward her anytime I get anything, and she just takes care of it. So it's been a game changer. And now, like, I just want to outsource everything, like literally everything, because once you have that relief, it is so euphoric. Like, you just want to just get rid of everything, all the noise. You know, so she does projects for me. I'll give her open-ended things. She does marketing materials for me, design. She really can do anything and everything that I need.
Wow. I was thinking just clerical, like administrative tasks,
Yeah,
like
me too.
punching in numbers or like maybe mocking up a contract, something like that.
Yeah,
But like,
she can do that too.
that's that too. Okay. I think it's incredible to go on the creative side, especially if they know what they're doing. How do you, I don't want to dive too far into this, but like aside from showing them specifically how to do it on Zoom, and I love that idea of recording, I guess when you're interviewing or looking to hire, how do you know, you mentioned somewhere overseas, I'm thinking like, okay, is there going to be a lapse in like language or any barriers that you've had to deal with? Like, how do you find the right person for you?
So I've hired 2 VAs before. So I have my VA currently, and then I hired another VA for a project specific task. It really depends on the skill set you need for the specific task. So on the one task, for example, I didn't need someone to be proficient in English. They could have, you know, really stumbled their way through it and made it through the process, because what I was asking them to do was data mine for me. So they had to be able to read and understand English, but not necessarily be able to like vocally communicate as proficiently, because it was internal data that I was collecting. So when I went to interview the person, that's the mindset I have. I know the specific task that I need them to complete. I was interviewing for that. Actually, Jay and I hired this person like 2 years ago to do data mining for us. And we had 3 excellent candidates, and all 3 of them could have done the job, to be honest. We liked the one guy the best. We hired him, and he got the work done for us, and it was amazing. Then this other woman that I've recently hired, she's my executive admin now moving forward since September. Interviewed her. I first interviewed the company, you know, had a conversation with the company, got to understand their process and what type of VAs they have. So I knew if I could expand within their VA system. And then I found her, and, you know, she was actually the first person I interviewed within the company. And I knew immediately, very proficient in English, very easy to work with. And I figured if it doesn't work, it's $600. I'll go to another VA company. It's not the end of the world. Like, I've lost $600 in this business, a lot of other terrible ways. So it's not
If
that
that's the only amount you lost, then you're doing a really, really good job.
that is not the only amount I have lost.
Yeah, exactly.
So $600 on a gamble like this, I mean, I'm willing to take it. So she's just been fantastic. I can't say enough good things about her. You can have VAs work, to your point, where, you know, they're in other countries. You can have them work US hours if need be. For me, to be honest, at this point, what I have them doing, I don't need them to work US hours, because I'm not having them, like, I'm fine with sending her work and then getting it first thing when I wake up in the morning. It's actually perfect for me, because, you know I can send her stuff at midnight and it's not a big deal, because I know she's working at that time. It's been great. Really has been.
Excellent. Well, we respect your time. We are kind of winding down here, but I do want to dive in on one last very important part of the show. You are an author, and I really want to dive into your book. Can you please explain your book, The Only Woman in the Room, and I guess the mantra behind it and why you wrote it and felt the need to put it out into the universe?
So the reason I wrote the book is I was attending Dave Van Horn's Mid-Atlantic Summit in Philadelphia, and Liz Faircloth and Andressa Gadelli, the co-founders of the Real Estate Investor community, invited all the women in attendance to have lunch together during the conference. And as everyone was getting to know each other, I looked around the room and I saw that just 2 table suites together full of 16 women in a room of 450 attendees. And it just dumbfounded me. I didn't understand why so few women were at this conference. And at that moment, it just came over me. I was like, I'm going to write this book called The Only Woman in the Room. So on the drive home with my husband, I told him this idea. And then over the next year or so, I secretly interviewed women. They didn't realize what I was doing, but I was diving into their story to get to know them, because I was trying to identify women that I wanted to highlight their story. I think overall, as an industry, we have a lot of male role models, but we are very short in having women role models. People typically, when they're women in real estate, and even when I say I'm an investor, if someone doesn't know me or know my background, they naturally think, oh, are you a real estate agent? And, it just kind of defaults to this, career that's like, no, I'm not. I don't have my license, so ironically, my husband has his license, but I don't. So it's just very interesting, the dynamic. And I also, too, I have 2 daughters, and I want them to have role models that they can look up to. And I also think that there are incredible women in this space, absolutely brilliant.
We've met a couple, including tonight. So, I mean,
Oh,
seriously, we've met, and like, we love interviewing all people from all over, and the women that we interview are excellent. I think that they're super underrated in this space, especially.
It's almost like they have to oversell themselves to get the same opportunities. So women typically at conferences, they're on panels, but men are the keynotes, or they get to do the main stage conversation. And when women are asked to speak, they get asked, how does it feel to be a woman in real estate? That really is a deficit to every woman, every person in the room, not every woman, but every person in the room, not because it's a question on being a minority within an industry, but it's because that woman has so much knowledge to give on their experience. And instead of speaking on their experience that everyone in the audience can gain from, they're talking about this, there is stuff to gain about learning about how minorities are in any industry. It doesn't matter. But I think that giving the respect to women who have done incredible things in their investing career should be highlighted. So that was another reason for writing the book. And I've been surprised, because some of the most incredible feedback I've gotten on the book has been from men. So I mean, especially right now with the holidays coming up, I have received multiple messages from men saying, I got this book for my wife, for my daughter, for my sister, because I want them to invest with me. And I hope this book encourages them to do that. And I've really tried to, talk to them, but I really think this book is the answer because I read it and it was a great book, blah, blah, blah. So it's proving to have a lot of other benefits that weren't originally my reason behind it. But obviously, I'm happy to help everyone pursue financial freedom.
Awesome. I love it. I'm curious what kind of, like Rye said, winding down a little bit here, but like, what are your future goals with your business? Where do you see Ashley in the next 5 to 10 years, as you advance?
I love multifamily, so I'm going to continue with multifamily. I love working with my dad, so I'm going to continue that as well. We have additional arms of our business that we're growing out and expanding that are supportive but independently operating. So I'm going to do that as well. I also too, I recently became a partner of the real estate investor community, and clearly from the conversation we just had on the book, I'm a firm believer in helping women advance their financial freedom through real estate. So I want to continue to be an active player there, and helping Bigger Pockets too. I'm a live stream contributor to Bigger Pockets. So I enjoy doing that and giving back. One of my ultimate goals is to have enough financial freedom that I can make a monumental change in the world through financial means, and not just writing one check, but really making a change and having a lasting impact on the world. So I want to get to that point. I really want to figure out a way in which I can create a sustainable change. Jay and I have spoken about targeting certain humane societies to go from non-kill shelters to or kill shelters to non-kill shelters. So maybe that's an offshoot of something that we can create, where we create a whole system that can be implemented across the entire country, so we can get rid of problems that occur on a national level. But that's the type of global thinking that I'm trying to do. And also too, with housing and providing housing benefits, I have some ideas on in ways in which we can help communities continue to grow and be stronger, and change not just the tenant population at a community, but the overall community itself. So really trying to look for some bigger changes as opposed to just these, one-off type of changes.
Great. The last segment of our show is called The Last Drop. And I'm curious if you have a resource or a tool, or some sort of resource that you can't live without, or something that would help an investor up their game to the next level. I know we're kind of putting you on the spot here, whether maybe it's a book, an app, a tool, a podcast, some sort of tangible advice that maybe you could leave with our audience.
I'll give one tool. I think people underestimate the power of all the applications through Google. I think a lot of people think that they have to buy these platforms and different systems, but Google integration is incredible. And it's the ability for me to have created and operated and managed all these businesses from across the world on my phone. So that is something that I think people, they're like, how are you managing these multi-million-dollar businesses? And it's like literally through Google on my phone, and the integration that it has on a team. So that's really good. A recent resource that I've used, just to add one other thing, is ClickUp.
Never
And
heard of it. What is it?
ClickUp is incredible. It's kind of operates comparable to Microsoft Project, MSP, if you're familiar with that, but it creates dependencies, and it's a collaborative tool that allows people to have specific responsibilities to execute a task, but it also has a communication system within there. So, and it has a lot of integration as well. So you can like copy specific tasks. You can put things in parallel. You can put subtasks. I mean, it's really pretty robust, and it's free for now. I'm sure it'll change soon because it's really, really
Free's good.
incredible. Yeah, but I really enjoy that tool. And I'm not a tech person, so clearly, because I use everything with Google.
we love G Suite too.
Yeah.
Google Sheets, the
Yep.
version of Excel, Docs, everything. So that's how
Yeah.
we run our podcast business and real estate business. So totally agree on the same page. So say someone listens to the episode and they say, wow, she is badass. We love Ashley.
Badass.
You read it, kind of alluding to my point here, or foreshadowing. So how can people get in touch with you? Where can they find more information about you? And just also, where can they find your book? I really want people we're going to read it. So I just want to make sure everybody else has an opportunity to go find it.
So you can find more about me at badashinvestor.com. And from there, you can link to the book. The book's available on Amazon. It's also available on therealestateinvestor.com/book. If you want to follow and see what I'm doing and see who's inspiring me and, I don't know, whatever other crazy things are going on in my life, you can follow me on Instagram, which is Badash Investor.
Awesome. This was a great episode, and you covered a lot. We really appreciate your time, and we just want to say thanks for coming on.
Thank you so much for. Oh, go ahead.
No, I was just going to say it's an honor. You really touched on a lot of different things that we haven't had before, and I think
It's perfect.
Listeners will be very appreciative. And we could have talked for 3 more hours. I have no doubt. You are you're full of information. So thank you so much. It was an honor, and you're a great person. So we appreciate you.
Thank you both so much. I really enjoyed being on the show.